All right, so we're just going to go through price action today, the market today. This is the Russell, and where it was. I will just take it from up there. Right? So this was a pretty interesting day in that the market sold off, and but it gave a lot of false reversal signals. All right, so and the first one, I'm not sure if it was the first one, but right here, a significant amount of buying pressure came here. But when first it went, it was in a downtrend. Right? You had, that was a breakdown bar right here with the wick. These wicks are very, very important. Before on candles, I couldn't care less about them, but now I realize that they represent failure. So you need to understand that, especially when there's follow through. But what it means is that they attempted to go up, failed, and went down. So someone's defending that area. Anyway, so market's going down here. You had some pressure. I thought it was some type of volume off the bottom, but then I saw that these rallies were weak, weren't really that good. Finally, it goes down. Here, right here, there was an attempt to take the market higher, meaning right in this wave, there was some buying pressure, especially right there when about 1,000 contracts were traded, right in there, coming from a potentially oversold position. So usually you'll see these reversals occur when there's oversold and they start buying. Why? It's the best price. So this was a big wave at the time relative to the prior down waves. So chances are that this is going, and then when it made that slightly higher high, then it was only a matter of trying to see how the behavior was in a pullback. So what happened was you had volume off the top, volume off the bottom on this candle, or Renko brick or whatever. There's over 2,000 contracts traded here. So I said, okay, maybe there's some accumulation here or some covering or something. Especially when it goes down after and then comes back up to take out the high. That seems constructive. But instead, it went into an upthrust position, was sold off. And then again, it started moving sideways like this. When it starts moving sideways like this, by itself doesn't mean shit. But when it has, again, heavy price volume action here and here, that is meaningful. So it could have been a base for accumulation. And the volume here picked up 1,300 and 1,700. But they couldn't do any, they couldn't trend. Why? Because at resistance, it just died. But these were very bullish indications. 1, selling. 2, heavy buying. 3, sideways. 4th, testing. 5th, heavy buying. That took it up. Now all you need to do is wait for the pullbacks, see it's weakening, see the reversal, entry. But unfortunately, there's some indicators or some fundamental news that is not good for today, but might get a bounce tomorrow. So this looked very constructive. Climax, heavy buying, test, rally, blah blah blah. But it was just too late in the day for the market to reverse. It was just too late in the day, and the range was fulfilled to the downside, meaning the range from high to low. Right? Typically, you have about some type of average true range or whatever, and that range was fulfilled, meaning it made that movement from high to low to the downside. It wasn't going to go up, so it just continued to go down. And then you had that range from high to low. Makes sense. All right. Here was the heavy pressure. Actually, what if you were looking to buy a pullback, you have the mistake that's made, right, all the time is when you have bullish indications on the left hand side and it rallies, and instead of waiting for the pullback and seeing the reaction, you put your order there thinking it's going to tap it and go higher. That's a mistake. Okay, why? Because these are a lot of times these maneuvers just go to a resistance area from where selling ensues and continues a down move, or they make a bullish picture only to sell it off. Why? Because they need to distribute. So bullish picture goes up, people start buying, they start selling into that buying, and otherwise this was a very nice, very constructive right here. I saw going down, big volume, picking up. At least it could have gone like 2-3 waves higher, especially near the low and climax, etc. But fortunately, you have to wait for this pullback. You have to see if there's a reversal. There's no reversal, which means it becomes a base to do a minor push-up into resistance from where selling will occur. That's what happened. Sold off. Alright? And then the rest is history. We had some more short covering right here. Right? We had a breakdown here, breakdown here. Well, the breakdown right here, what happens? Obviously it holds. It holds. Broke, bang, 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 3 holds. Here, it held once, then it went higher. Here, I don't see it. Here, it didn't hold. Here, it tagged. Up thrusts, went a little bit lower. Anyway, long story short, what is the lesson to be learned? The lesson is no matter how good the background is or the left-hand side is, you always wait for the right-hand side to show its hand. The left-hand side is not enough. You need to see the right-hand side. What is the right-hand side? The right-hand side is after your potential change of behavior. This is your change of behavior. Anything on the right-hand side will be after it. So what do you expect to see? You expect to see a couple of key behaviors. One is testing any breakouts or breakdowns. So the testing process. You expect to see possible bases form on the right-hand side. In terms of price volume behavior, you expect to see a demand or supply or whatever drying up of volume. You also expect to see springs or upthrusts and effort reward. That's what you're going to see on the right-hand side. These are the behaviors. That's typically what happens on the right-hand side of the change of behavior or sign of strength. You need to see that. All it indicates is one of two things. One, the volume has dried up, meaning if it's bullish, the supply is dried up. Or there's a lot of effort to go down and it can't. Or that it's creating springboard type maneuver. It just means there's going to be a bunch of tests, 1, 2, 3, 4, and then low volume, and then it goes. So it's really important to understand that type of situation. Okay, so this also, what time of day it hit? This around 10 o'clock. That's when the downtrend started. Yeah. All right, that's all, folks. Take care.